Hello, this is Dave at AFX Search, licensed private investigators. One of the areas we work very frequently on is fraud investigation and asset recovery, and a big part of that comes down to cash flow forensics. What we mean by that is when we look at a potential debtor that has a judgment against them or is committing fraud, we're going to look to see if their cash flow matches their income. It's kind of a simple math problem, but it's more complex in terms of the investigation. What we're going to do is compare what they're spending and what their outflow is of money, whether it's on personal spending, whether it's on buying assets, whether it's on converting money into other types of assets, and we're going to compare that with the income that they're supposed to have or supposed to have been reported. First, we have to find the spending, and sometimes that can come from financial statements, from credit card bills, from checks, but most individuals who are subject to a judgment or asset recovery are going to disguise their spending, so a lot of it's not going to be on the books. They're going to buy things under the table, they're going to pay cash for things, they may even use alternate payment items such as prepaid debit cards or debit cards that come from bank accounts not in their name. Either way, we're going to document all the money they spend during the course of a month or quarter, and that might result from like we said, financial statements. It might come from doing surveillance, it might come from doing witness interviews with people they've done business with, like asking a restaurant, how much has been spent by this person over the course of a month. Might be looking at payments made on behalf of others. For example, if they put a car in somebody else's name, they still might be paying the insurance and taxes on that car, or even the car payments. So we're going to look at all those payments. We're going to add up all the payments they make over time, cash, debit cards, other people's money, financial statements, and see how much they spent in a given month, or average it over several months, and see if it matches what they're reporting for income or what they're telling you as a creditor their income should be. Once we do that, if we find a big disparity, that will be the case for collecting assets from them or finding out where this money is coming from. If it's a debit card that we observe through surveillance being used at a restaurant or being used to get cash from an ATM, we're going to find out that debit card number, again, through investigation or maybe surveillance. Once we have that number, we'll find out where that account is, who that account belongs to, and where the money came from to go into that account. And that will be something that can be used in the asset recovery or investigation in court. One of the things we'll make sure to factor in is make sure there's no sale of assets. For example, if they spent more money than they took in, but if part of that's from selling a house or selling a car, we'll factor that into the cash flow. Even if they did a cash out refinance, we'll factor that in to make sure that doesn't cover the difference from their spending versus what they're supposed to be making. So cash flow forensics is an excellent first step in determining fraud. It's an excellent first step in determining if a person has assets that's hidden, and it's an important part of any investigation for financial fraud or any other type of financial asset recovery.